Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay, let's update our view on the gold market. Yesterday it was interesting performance in general. Market has dropped to the area that we have specified, and recent performance was said it would be better to wait for a pullback, and precisely to the confidence area that we have set. Yesterday in our discussion, market has dropped and has shown minor pullback yesterday. So, well, it should be exceptional skills to catch the entry point yesterday. So if you have done it, this is great. You could move stops to the break-even and see what will happen. For those who haven't taken a position recently, we suggest that you could take a look at the few moments. In general, market has a chance to show the bullish pullback, bullish performance, and currently is very suitable point for that. Maybe it will not guarantee us long-term success, but it creates the overall environment and the situation where position taking looks relatively, well, not maybe riskless, but with a very low risk level. So, because the chances on the pullback looks really significant. Here's what I'm talking about. First of all, by taking a look at the technical indicators, the drop on the gold market is a reaction on the rising interest rates yesterday. So if we'll take a look at the 10-year yield, you could see what has happened after the Christmas. So a couple of days ago we said that, well, we will see what will happen. Indeed, if market will start dropping here, forming the butterfly, that will be great support to the gold, and so on. But yesterday, with the forming of the bearish performance on intraday charts, we said that it will be better to wait for a pullback. And as a result, you could see it also was supported by the performance of the interest rates that has shown the straightforward action right to the 618 resistance and 156 resistance level. 156. By this action, market also creates an agreement resistance as it completes the ABCD target. The OP stands also right here. As a result, we've got cartilage steeple to sell. It, in general, it is bearish reversal pattern, but it has the minimum target of the 30% pullback. This thrusting candle right to the target makes me think that later we still could get the further upward direction on interest rates, but right in the moment when the market hits the resistance, it means that the chances on the pullback is significant. It means that gold will get the support, and it makes relatively riskless or with a low risk opportunity to take the long position on the gold. So you should get the chance to move stops to the break even or even get some profit with very high chances, very high odds to happen. So just because of the technical response to the resistance that we have. But the problem here is that, guys, actually today is the last trading session for the gold, and tomorrow the exchange will be closed. So and you could proceed with this trading only after the New Year's Day. So anyway, that's what we have as a preliminary statement for background that we are discussing. Now let's take a look at the gold directly. On the 4-hour time frame chart, you could see that overall collapse yesterday was relatively strong. Market hits the support. It's also a natural support, but also we talked about the confidence, if you remember, around 7-90, 7-95. That was our area that we called to wait for. It's just because here was relatively strong action. That was already the first support area, and just by analyzing and watching on the strength of the action, we suggest that might be another leg down. So that has happened. Here, guys, you could recognize two important moments. First of all, market has formed big morning star pattern with these 3 candles, right? And stands now in a retracement back in the body of this pattern. So to make the decision on the possible position taken here, actually invalidation point will be right here below these lows, because this is very short-term trading setup, And we hope that market will show some upward bounce, maybe not in excess of this top, but at least at some maybe A, B, C, D pattern, something to the upside of this kind, at least, because we're dealing with the interest rates performance and there should be the minor retracement. So that is the minimum points that we're count on. So to make this decision on a possible entry, we have to take a look at the hourly chart, where we have the few important moments. First of all, take a look. With additional to these bearish diversions, right here on the fall time chart, we mentioned it yesterday. You can see that's potentially looks bearish, and potentially after retracement, it still could lead to the breakout. This is what could happen if interest rates will keep climbing higher later. But in the shorter term, we also have these bullish diversions, which is also seems might be important. So to make a decision, we have to get here some bullish pattern. By this performance that we see, the most probable one, it might be that card is cheaper to buy. So for instance, if we will get within the few hours here, this kind of the A, B, C, D pattern with the OP somewhere around the confluence, well, that might be taken, because this will be very small risk. So if, for instance, you're taking position 1793, lows are 1789, so it's just $4 per contract. It's very small risk. But potentially you get the chance to get the same upward performance, somewhere to 18 or 8, at least. So maybe it will be further acceleration, but at least it will be this target, with the very low risk of the immediate breakout, just because of the situation that we have here on interest rates. So that is the short-term setup that we could deal currently. So by taking currently, it is difficult to foresee what will happen after that. But right in the moment, we have this short-term setup that you could consider, think about it. So if you find it interesting, so you could try to follow it.